Welcome back, everyone. This is our looking at the charts report for this week. My name is AUDNZD, and today we'll be presenting four charts. The first is Euro GBP, the second is AUDNZD, third is a commodity, WTI, and fourth is a safe haven, USDJPY. Moving straight to Euro GBP 4-hour chart, some fundamental points that traders should have in mind. Today, we have a speech by Michel Barnier, who is the main Brexit negotiator for the EU side. The speech is important and could set the tone for the pair and for other Euro and GBP pairs. More negative news was released today for the Euro, as Italy announced schools would be closed nationwide until March the 15th to contain the spread of the coronavirus. Also, the European Commission said both Italy and France are at risk of slipping into recession, so traders should watch out for this type of headlines in the next days that could move the euro. For the GBP side, reports have surfaced today indicating Goldman Sachs analysts expect the Bank of England to cut rates by 50 basis points in its next meeting. Moving now to our technical analysis, we are viewing the pair forming a small downward correction from the upward momentum that started on the 27th of February. On the 2nd of March, the pair stabilized nearby our now R2 0.8720 level and continued heading lower, breaching our 0.8660 level. The two levels just mentioned are possible stops if the currency moves upwards, while in the far bullish scenario, we could even see the R3 0.8806 level being reached. However, if the pair continues to move lower, it could initially stop at the S1 0.8595 line, which was briefly tested on the 28th of February and the 2nd of March. Even lower, the next stop could be the S2 0.8530 line that was tested on the 27th and the 28th of February, while if the bears completely take over, we could see the pair testing the S3 0.8470 level. Moving now to AUDNZD for our chart. Fundamental points. The Reserve Bank of Australia cut interest rates to a record low of just 0.5% in the previous days. This was a measure to fight back the negative impact from the escalating coronavirus crisis. Furthermore, Australia has extended travel bans on China and Iran and added South Korea. For the NZD side, as long as the market waits on RBNZ, that's Royal Bank of New Zealand, to announce its mostly priced-in rate cut, the New Zealand dollar could continue to gain. Moving now to our technical analysis. The pair moved higher and tested the R1 10520 line in the past 2 days and has retraced lower today. However, the levels to the upside and surpassing our R1 could be first the R2 10570 and the R3 10640 levels. To the downside, the first level that could be tested is our S1 10450 that was tested on the 3rd and the 4th of March, while below that level is the S2 104 that was also tested on the 3rd of March and could also be the next stop. A strong bearish scenario could also send the pair to our S3 10320 that was last seen back in late January. The RSI indicator below our chart is currently returning from the 70 level and crossing the 50 level, displaying further the bearish movement with a possibility of some stabilization being seen. WTI for our chart. Fundamental points. Today the OPEC meeting starts, and analysts expect Saudi Arabia along with its allies including Russia to agree to further output cuts to support the market. On the other hand, the EIA weekly readings implied crude stocks saw a small increase last week, but less than what analysts had forecasted. Also note US oil exports surged to more than 4 million barrels per day for the first time since December, suggesting a rise in overseas demand. Technical analysis. Today the commodity tested the S1 46.55 line, but for the time being was not able to break it. In any case, the levels to the downside could be first the S2 4530 that was tested on the 28th of February and the 2nd of March, and even lower the S3 43.60 level. In the opposite direction, the first level in an upward movement could be the R1 48.80 that was tested on the 2nd and 3rd of March, while even higher is the R2 50.50, which is also imminent and could be tested, while in an ultimate bullish movement, the next stop could be the R3 53.70 line. Moving now to our USDJPY pair. This is the 4-hour chart. Fundamental points. We would like to advise caution, as traders may have to look out for any possible action by Bank of Japan to attempt economic boost in Japan. Also, safe haven flows could be in demand on any unexpected news, as we had unexpected rate cut by the US Fed, and we had an unexpected increased rate cut by the Bank of Canada yesterday. So unexpected news may continue and could affect the USDJPY. In addition, please be aware of tomorrow's US employment report, which could move the pair extensively. Technical analysis. The pair has been correcting since the 19th of February, forming a steady downward momentum that persists until this day, starting with the possible levels in an upward movement. First, we have the R1 107.20 line, then we have the R2 107.75 level, and even higher is the R3 108.40 line. All these levels have been tested in the past days. In the downside, first, we could see the S1 106.70 level that could be tested, while lower is the S2 105.85 line, and even lower is the S3 105.30 level, which is also a possible stop. Please note, as we said at the beginning, the pair is currently in a downward movement, and we haven't seen any change until the moment. Also note the RSI indicator is crossing the 30 level, implying the bearish momentum persists. Now that's it for our report. As a closure, we would like to note that looking at the charts is designed to help traders identify important levels. However, you make the decisions of what works and what doesn't work. Keep that in mind. Thank you very much for your time. Enjoy solid trading.